Hey folks, it's Deepak here from The Bottom Line. Just wanted to make a special video here, just really to address all of our viewers. And clearly there's been quite a lot of pain in the markets lately, especially as it pertains to that growth sector and really all of Kathy Wood's former stock darlings, we can say. But yeah, like really you look at it, a lot of these high growth stocks that performed really well in 2020 and for the first part of 2021 have been getting absolutely crushed, right? A lot of them are down 50, 60, 70% from their all-time highs. And if you're still holding on to them, it can be quite a bit of pain, right? So I think we're all feeling it, whoever's holding those types of stocks in their portfolio, and even the indices now are starting to show signs of either a pullback or a correction, whatever the case may be. It'll still have to play out for us to definitively say how steep this will go. But just wanted to really put out some strategies that we can sort of adopt and try to navigate the uncertainty of the markets for the next little while. So the first one is, again, going into cash. And this doesn't mean sell all your stocks for losses and just sit on your hands, but it does mean that prudent risk management would suggest that, you should probably keep a portion of your account within cash, whether that's 20%, 25%, 50% if you're really risk averse, and just have that sitting in there. Just to be able to dollar cost average, right? As the market continues to decline, potentially you can sort of take that cash and start to nibble away at it. And that's really a good way to dollar cost average. And dollar cost averaging is great for long-term investors. And I think having 25% of your account in cash, for example, puts you in a position to do like a weekly or a bi-weekly DCA, dollar cost average, where you're putting in maybe 10% of your cash available on hand every 2 weeks, for example, right? And that'll take us really towards the middle or later half of 2022. And hopefully there's more certainty in the markets by then, right? Alternatively, you can sort of wait for a trend reversal. So naturally, I think when there's a change in momentum and you can see more strength in these stocks or cryptocurrencies, for example, then you can decide maybe it's a safer time to start it averaging in then rather than averaging on the way down, right? So naturally, there's more risk there to average on the way down, and it's hard to stomach some of the volatility sometimes. So maybe that's a better option for you. And then really, if you're more feeling a little bit more daring, I should say, is you can potentially look at opening more short positions, right? So I don't know if that makes sense now to open short positions against stocks that are already down 60, 70, 80%. But for example, cryptocurrencies, right? Like you've seen Bitcoin take quite a bit of a beating. If you think that, based on your own technical analysis or research or whatever the case may be, that you think that there's a longer way to go down, then you can open a short position. And in one of our previous episodes, we also talked about BITI, which is the inverse Bitcoin ETF that's available on the TSX. So again, if you think the cryptocurrency market's going down, you can look to buy that. Alternatively, you can even buy that as a hedge, right? So you can be long Bitcoin, hold Bitcoin in your portfolio. But if you want to mitigate some of that downside risk, maybe you open an inverse position on it, right? So again, none of this is financial advice, but again, I think that it was important to just send this message out because clearly there's a lot of pain in the markets. And if you're holding on to one of these stocks, then you're feeling it as well. And so just wanted to put this message out there that there's a few options that you have. And the other option is, again, just waiting it out, right? So just don't look at your account that often and, eventually, hopefully it'll come back. So not to worry, don't be stressed out, but we'll bring in more quality content in the weeks ahead. Just wanted to check in for now. Thanks so much.